Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 9th, 2025, and we're diving into Ferguson's latest earnings report for the quarter ended October 31st, 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ferguson has delivered a robust performance this quarter, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Ferguson reported net sales of $8.2 billion, a 5.1% increase from last year. John, what are the key drivers behind this growth?
Ferguson's growth was primarily driven by a 4.2% organic revenue increase and a 1% contribution from acquisitions. Despite some adverse foreign exchange impacts, the company managed to maintain strong sales momentum, particularly in the non-residential sector.
And how about profitability? The gross margin improved to 30.7% and the operating margin reached 9.4%. What does this tell us?
These improvements indicate effective cost management and operational efficiencies. The gross margin increase of 60 basis points and the operating margin expansion by 80 basis points reflect Ferguson's ability to leverage its scale and optimize its operations.
EPS performance and analyst expectations. Ferguson's adjusted earnings per share came in at $2.84, surpassing the analyst forecast of $2.77. John, what contributed to this EPS outperformance?
The EPS outperformance was driven by higher adjusted operating profits and the impact of share repurchases. The 15.9% growth in adjusted EPS highlights Ferguson's strong execution in a challenging market environment.
With 5 analysts covering the stock, how significant is this beat?
It's quite significant. Beating the consensus by 0.7 per share demonstrates Ferguson's robust financial health and strategic execution, which should instill confidence among investors.
Strategic initiatives and market position. Ferguson completed the acquisition of Moore Supply Company and repurchased $208 million in shares. How do these moves fit into their broader strategy?
These actions are part of Ferguson's strategy to consolidate its market position and return capital to shareholders. The acquisition enhances their HVAC offerings, while share repurchases and a 7% dividend increase reflect their commitment to shareholder value.
Non-residential revenue grew by 12%. What does this say about Ferguson's market position?
It underscores Ferguson's strength in the non-residential sector, driven by their scale and expertise. This growth is crucial as it offsets the challenges in the residential market, where revenue was down by 1%.
Financial health and future outlook. Ferguson's net debt to adjusted EBITDA ratio stands at 1.1x. How does this reflect on their financial health?
This ratio indicates a strong balance sheet, providing Ferguson with the flexibility to invest in growth opportunities and manage debt effectively. It's a positive sign for their financial stability.
Looking ahead, Ferguson has updated its 2025 guidance. What should investors expect?
Investors can expect around 5% sales growth and an operating margin between 9.4% and 9.6%. Despite a challenging environment, Ferguson remains confident in leveraging market tailwinds, particularly in non-residential sectors.
Key takeaways. In summary, Ferguson has delivered a strong quarter with impressive sales growth and profitability. Their strategic initiatives and market positioning continue to drive performance. John, any final thoughts on Ferguson's investment prospects?
Ferguson's robust financial health, strategic acquisitions, and market leadership position them well for future growth. Their ability to outperform in non-residential markets is particularly encouraging for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ferguson's performance in the comments below.